Hey there, I'm back. This is my second live stream today, but I'll do a quick summary of the first one, but I really want to just give you the latest. More importantly, my first one I talked about the global strategist outlook, how we got here, what the tariffs are all about, and real macro and Wall Street strategist stuff. But I want to get more into how this is affecting you. And I want to get to things on a personal level because you're the one who is going to drive home from work or pick up your groceries, pick up your dry cleaning, fill your car up with gas, drop your kids off, go play golf, go to the gym, whatever it is. So is how much more expensive is your life going to get? Like, are you going to start getting upset? Are you going to start getting miserable? You're going to have to cut back. What's the difference between a bear market and a recession anyway? And which one is worse? I have these answers. So we'll talk about that and a couple of other things. And I'll just say that the headlines are coming out as fast and furious. Two headlines just came out, totally contradictory from the Trump administration. I'm going to show you those as soon as we come back. So stick around. And if you have any questions, you know what to do. Ask me in the comments, whether if you're watching the live or the replay, ask me. Give this video a thumbs up. You're watching somewhere, Facebook, LinkedIn, YouTube. Give it a thumbs up. Let other people know that you're watching this. We're calling balls and strikes here. We're giving it to you straight. You don't have an agenda with this. We just want to give it to you straight. We feel that the more information and education we share, the better everyone's going to be. I'm doing this for 35 years. I have a lot of perspective, okay? So I'm going to share that with you. Here we go. All right, and we are back. Let's just take it to the tape right off the bat. Let me make this a little bigger so you could see it. All right, there we go. All right, U.S. markets. Dow is down almost 1,700 points, just about 4%. NASDAQ down just about 6%, down over 1,000 points. That is a huge drop. Now, I realize that, the NASDAQ could be a little bit volatile and it's more so, typically have bigger highs, bigger up moves, bigger down moves just because of the focus it has on technology. But that is a huge move, down 6% for an index in one day. S&P is now down, S&P 500. If I didn't have to tell you that, I think you knew what I meant when I said S&P. Down 275, down 5% today. Holy smokes. Gold was down a little bit. Oil was down $5 a barrel. Okay. Oil was down $5 a barrel. And let's take a look at some of the other things. So that's a big deal in oil to be down that much. And if you think like, well, this is good because, we're bringing down the price of oil and Trump said he's going to bring down oil. No, and the OPEC said they're going to increase production by a tiny bit, by the way. Now, oil is down this much because of worries about demand destruction, because of worries about a recession. And the VIX, not only did it fly up today 40%, but it closed at 30. That's kind of a magic number, 30 on the VIX. That tells you that we are getting into oversold conditions. I wouldn't say it's panic mode. We have to see that go to like 40 until we could say the market's panic mode. But the tariffs that were announced yesterday were much worse than anyone expected. Some people are celebrating the tariffs. I get that. Some people feel that their lot in life and their family's lot in life was permanently ruined because of globalization, because of NAFTA. And I get that. The factory jobs, upstate New York and lots of areas in the middle of the country, jobs have been hollowed out. And I think that you have to understand the anger at this, how yes, the country is so much richer. Our country is so much richer because of globalization and NAFTA. But not everybody participated, and that is the I'm going to say it, that's the MAGA base. It's they feel they have been screwed over, and I'm not arguing with that. They have, what they've gotten in return for help was, some welfare, I guess. I mean, you really have to try to look at the other side's point of view, and everyone has to do that. I mean, I could see why the coasts, people in Wall Street. I'm a Wall Street guy, so I could see why we are against tariffs. And sorry, I could see why we're against tariffs, and because this changes the calculus for us, because now we're the ones who are going to suffer. And we're doing so well with our houses up and our stock market portfolios just bulging with cash, just crazy amounts of money. There's so many 401k millionaires today, and people have jobs and they work for companies that give stock options. But if you're just getting by on a salary working in a factory, life sucks. And your wages have fallen behind inflation by a lot. So, you say tariffs are going to raise inflation and cause stagflation in the economy. These people are in such a bad lot that anything is worth a shot. That's how bad it is. And until everybody understands that, you won't really understand the fury, the anger that people have. I said this in I guess I'm touching based on what I spoke about this afternoon, but we don't live in a world of what we want. We don't invest in a world that we would like to see. Okay. We don't operate in a world that we think it the way it should be. So I'm giving you the nonpartisan stuff here, but I'm telling you, for those who are scratching their head saying, why would anybody support this stuff with the tariffs? You have to understand what's going on. I see it in my own state, upstate New York. Lots of factories, Kodak, IBM, GE, they just picked up and closed factories, and entire towns, had skyrocketing unemployment. And those jobs never came back, right? But you have to understand what people see, what people have lived with. All right, so yeah, I know low prices, buying low price crap at Target and Walmart has been a good deal for most Americans, but a lot of people that was not a great deal. And Biden tried to fix things. He really did. He tried to he came up with the Inflation Reduction Act and the CHIPS Act, and both of those were about pouring money into new jobs, new technologies, clean energy. It was a nice try. It missed the mark. I don't think it missed the mark as badly as what's happening with the tariffs, but they were both really just complete opposite ends of the spectrum. I see Linda out there with the heart. Mwah! Good to see you, sweetie. I'll see you later. Yeah, Mitch. Oh, that's so freaking cute. Thank you. So you have to see where people are coming from. If you just talk over each other and you don't listen to the other person where they're coming from, you're never going to solve anything. When people are saying, one thing, and look, I mean, red versus blue, however you want to put this, it's when you understand what people went through. I think the Biden administration tried to come up with a fix, and again, Inflation Reduction Act and the CHIPS Act, but those missed the mark. I don't think tariffs are going to make the mark either. Now, let me give you a worst case scenario. If these tariffs stick, and they are not a negotiating point, these stick, and they're going to be with us for more than like literally a month. We don't just go into a recession. We go into a deep recession, like Lehman Brothers event. Remember that from 2008 when Lehman went under? Okay, that was like August, or I think it was August or September of 2007. It was September of 2008. Okay, September of 2008 when Lehman went under. I'll never forget that day. I mean, I know where I was. It was the Jewish holidays. I think it was. I don't remember if it was Rosh Hashanah or Yom Kippur. It was one of the high holidays. And I remember coming out of temple, and back then we all had Blackberries. You remember those Blackberries? There were no iPhones yet. And I joked around saying to my friends, you never saw so many Jews walk out of a building and check their their Blackberries at the same time. But I'd imagine people were checking their Blackberries of all faiths, of all backgrounds throughout the entire country when that happened, because that was just the end of the economic world. We were saved by massive bailouts with the Federal Reserve, the Treasury. We had TARP, Troubled Asset Relief Program, and the U.S. went into hock. But we did come out of it. Took a couple of years for the NASDAQ, for the markets to recover. But it turned out to be a pretty good time to be a buyer. Nobody thought it would be a buyer, which is why it was a good time to be a buyer. But if you bought, a little early or a little late, turns out it didn't really matter. Same thing's going to happen again, by the way, with the market. How early are we now? I don't know. We could be down easily another 10 or 15% in the major averages. S&P's down 12%. You can't invest directly into an index, but you can invest into a security that tracks your mimics an index. S&P is down about 12%, 13% from its all-time high. Could it be down 20 or 25%? Yeah, absolutely. Do I sit here and worry, oh no, what if it goes down more? Absolutely not. I don't worry about that. I'm in it for the long term. My clients are in it for the long term. And we have money that's short term. Don't get me wrong. Short term to me is if you're turning 65 and you want to retire and, at the age of 66, by the time you're in your late 50s, we're already moving your portfolio from aggressive to a little bit more conservative, a little bit more stable. And we're getting ready. We're raising some cash in your account. You might be taking distributions from your IRA. You might have to start living on the money that you've accumulated in your portfolio to pay to pay for your bills. So we've already started that glide path. So yeah, that's short-term money, and short-term money isn't in the market. That's personal finance 101. All right. So having said that, market got tagged, and you keep hearing the throwback. This is the worst day in the market since those crazy days when the pandemic was just getting started. Remember that? And we're seeing those down days every day, crazy down days, limit down days. Well, that was a time when we expected the economy to grind to a halt. And guess what? The economy grinded to a screeching halt. We were saved with massive stimulus and government spending trillions of dollars. And we got through it, and things were looking pretty good for stock market investors, for homeowners. Wages even started to go up, but for a little while, wage earners were starting to look good. But that didn't really last too long because inflation just took that away. So here we are, and I think that if we stay in the current trajectory, of these tariffs, we're going into severe recession, massive layoffs, foreclosures, businesses closing, shopping malls having problems, office buildings. You're finally getting that return to office mandate. That'll go away again. I don't think we're going there. I'm just giving you a worst case scenario. Before you say Mitch is being all doom and gloom, no, I'm giving you a worst case scenario. I think what really happens is Trump thinks the United States could take more pain than other countries because we're a big economy and we have resources. Americans aren't used to pain. We don't like to fight wars up close. We don't like to fight economic battles up close. We kind of do things from afar and kind of, go home and go to our softball game or a bowling league or a card game. And that's how we do our thing. In my case, the gym, my guitar, so that's how we do it. They're betting that other countries will cry uncle, will scream uncle. They will just say, okay, we will cut our tariffs. Could you please cut your tariffs on us? And the first few countries that do that, Trump will give them a good deal. He'll parade them around and say, look, it's working. We got a better deal with this country or that country or Singapore or Vietnam, and things are looking better, and we expect more countries to follow suit. That, I think, is what they're hoping for. I think that's the strategy. The administration said just a little while ago, pop the screen up here. Okay, check this out. That's not the one I want. White House trade advisor Navarro insists a tariff blitz is not a negotiation as markets crater. That means you're sticking to this. But minutes later, Look at the time on this. 4:40 p.m. No, this is not a negotiating tactic. These are going to stick, these tariffs. 4:50. Look at that. Look at that time. 4:50. 10 minutes later, Trump says he's open to tariff negotiations, contradicting White House aides. I think Trump blinked today. I think he blinked. I think he saw what's happening. I think he realized that Apple, who moved their production out of China during the first Trump tariffs, during the first Trump administration, moved production to Malaysia and Vietnam, other Southeast Asian companies. I can't remember them all. To get ready to get away from China. And now they're getting slammed with tariffs. So there's nothing Apple could do. They'll probably either have to discontinue products, have to raise their prices. That's why the stock was one of the biggest losers in the stock market today. That stock had its worst day in 5 years since. So you got it when the great pandemic was just getting started. So I think Trump blinked, and I think he sees, wow, you know what? If the economy does go into recession, even if you just give up on all the tariffs, it's going to take a while to repair a recession. Once we go into recession, you don't just come out of it then. Okay, you don't just get to say tariffs are gone. Okay, we're back, and the economy just comes roaring back. This damage takes a while to fix. Meantime, in about a year and a half, we have an election coming up in the Senate and the House. Tables can turn. In the meantime, companies that are saying that we're going to invest a lot in America, they're doing a study on that. They're looking to see, they're checking the dirt, they're checking the environmental stuff, they're checking the regulations, they're checking the market, they're checking to see if they have enough equipment. They're slow walking it because they know in 2 years these tariffs could go away. In 6 months, these tariffs could go away. And if they build here, they're stuck with white elephants, massive plants that cost so much money that they're not even competitive because they can't make products cheap enough in the United States. We go back to offshoring products. So if the tariffs go away, all things being equal, if all the tariffs go away, it pays for companies to go back to Southeast Asia, Mexico, to manufacture stuff. So you're kind of with the tariffs. Now you're damned if you keep them. You're damned if you cut them. It's a really hard position to be in. And I don't think the stock market is really priced in a deep recession yet. We'll see. I do think cooler heads prevail. I think negotiations happen. I don't think Trump wants a depression. I think he wants to be known as a great economy guy. I think he wants to run for a third term on a great economy. I think he needs to win the House and the Senate in less than 2 years to keep his policies going and to get a third term. So he doesn't want a bad economy. He thinks that this is going to scare everybody into negotiating with us. He's probably right. But he's going to put us through hell to get through it. And if we go through too much hell, we're not coming back so quick. And then he starts to run out of time, meaning when the midterm elections come up in 2026, November of 26, it's not that far away. Then all bets are off for his policies and his possible third term. And for J.D. Vance to maybe win, because the economy will be tough and people will be upset. Okay, that is the story today. Everything's going to get more expensive for now. Car dealerships, everyone's raising their prices now. So, I was talking to a friend of mine. I said, the cars are already on the lot. So they're not the ones that are on the boats that are coming over. But, we discussed it. We're thinking, but now car dealers have to make as much money on their cars as possible because they know they're going to have fewer cars that are going to be purchased in the future. I don't know. A lot of crazy things are happening, and a lot of business owners and consumers are going to do a lot of things to get through this, and it's going to cause a little chaos, a lot of chaos, actually. So stay tuned. I don't have an exact answer for you when this all comes to fruition, when things get better, but I know if you're a long-term investor, you'll get through this. I can't guarantee it because, it's not compliant to say that. We can't guarantee it, but I'm very confident in that. I'm very confident that if you're like me and you're investing every month into a retirement plan, keep doing it. Don't turn your retirement plan into a trading account. Just have the stick to itiveness and know that we've gotten through 9/11, world wars, Vietnam, the tech wreck, the Great Recession, a pandemic, housing crash. We've gone through so many things, and each test was insurmountable at the time. And we get through it and we dust ourselves off when we say, all right, I got through it. Oh, I wanted to answer this question. What's worse, a recession or a bear market? A recession is much worse because a bear market, stocks go down, stocks can come back. These are financial assets. But in a recession, you could lose your most important asset, your job. So recessions are a hell of a lot worse. All right. I'll end it here. If you have any questions, hit me up. And if there's a crazy day in the market tomorrow, I'll do another live stream. If not, then I won't. But keep it locked in here. Follow us, like us, YouTube, Facebook, LinkedIn, and I will see you all tomorrow or not.